ericmothers.com with the weekend market analysis for the weekend of December 1st and December 2nd, 2018. With about 1.5 hours to go before the close of the week, of the month, and of the day. Let's take a look at the charts here, see what the charts look like, and we're going to begin with the NASDAQ 3-year weekly. So what is going on here, in my opinion, is what I've been talking about the last couple of weeks, which is the market is still deciding what to do here, in the sense that this is good support and it is a good enough reason to expect that down the road this market is substantially higher. So that's what the weekly chart is suggesting. Keep in mind, as I mentioned this week in my midweek analysis, there's this crossover here between the 13-week moving average, which gave rise to the market, or predicted this nice market climb. And now we are seeing the opposite here, which does give us an idea here that the market could actually eventually and truly be pointing down. So we're always left trying to figure out what the market is doing. We never really are sure, but we try and figure it out just from a visual understanding of how things are setting up. So this is where we can see, I would argue, if this was the only chart we consider, that net, this is bullish for the general market. This double bottom support of the weekly RSI does suggest to expect markets to move higher. Now, that is true on a weekly standpoint. But you can also argue, well, the problem here also is we don't have momentum yet in the market to the upside. In other words, you have both MACDs trading below zero, which is a sign of a market that is still net in a downwards action, or at least the average move tends to resolve to the downside. So as long as we have both MACDs below zero, net on the weekly, we can still argue the market is not poised for a substantial move higher. Now we come to the daily and short term. This is what I was saying, is on the daily, and just bear with me here, because this line, I'm going to draw a different look, and it's this line here. This is how I would draw it personally. The reason being that if you take a look at this action here, this was a trap. Market went above the line, back below it. We can see that coincides with that price trap. We haven't closed above those levels since. Now, if you take the same line, you can see that it gave you a nice resistance point here for the highs there. It gave you resistance here where we went short again for this high. And I think if the market is unable to move above this level on the RSI, then this is where we stall. Now, of course, we had this big up day where the Dow was up 600 points because we moved above 50 on the daily. We remain above 50, but keep in mind, the more we continue seeing resistance on this level, and if we ultimately at the beginning of next month, next week, if we end up coiling back below 50, expect a big down day. And I think that's what the market is setting the stage for, even though it is concealing that look. So right now, market's been positive pretty much all week, but I think it is concealing, in my opinion, that it is setting the stage for resistance. Now, there's another way to look at this, and again, we go back to the uniformity method. We see that there's a break here. That break in the RSI coincides with this movement. We draw a line from there. Should look like that. Market has used this, and we did use this for a signal that the market was going to pull back, which is here. We went short around that level, and market did reward that thinking. I think we are back to the same type of situation here. The more we stall around here, the more we can anticipate that the market moves lower. Keep in mind, Generally speaking, if you can get this correctly, of course, it's always a tough ask. If you can get this before the market drops below 50, like we did here, you have a better chance of being part of this move to the downside. So I think we have a similar type situation where even as the market is moving higher at the highs for the day, I still maintain that this is still within resistance based on what we are talking about here. So there's the first line, RSI top on the NASDAQ daily, and the second line is the uniformity resistance line. I think we can still use that to anticipate the next swing trade, which in my opinion would lean to market pulling back. Now, take a look at the 2 hourly for the NASDAQ, even at the highs for the day. You know, the Dow is trading at the highs here, up above 100. I would still maintain the view that we are still looking at markets net that are still showing this potential for resistance around current levels right there. You can see how this has played out since the highs. Break of the highs, resistance, you get a high there, resistance, another high, and now here we are with possibility of resistance again. Now keep in mind the red line happens to be around 61.8, which means it is meaningful. Now keep in mind, we also have to respect that if the market can clear this resistance, if it can, that will be bullish. But the more we continue seeing resistance here, the more, given all that we've discussed so far, the more we anticipate that the next meaningful short-term direction is to the downside, and that remains my view. Now, if we take a look at the NASDAQ on the monthly chart, what I'm going to do here is draw a simple line that should be relevant in the coming month, because there's a scenario here. Take this line, connect it to the lows here of early 2016, extend it out, and you can see that the market is precisely on the line as we end the month here with a decision to make. This is going to be the key, in my opinion, in the coming month. And as we conclude the year, there is a scenario here which would be very bullish, that if the market can hold support and bounce, that would be very bullish. Now, I can tell you a break below this line, given that it is a long-term trend line going back to 2009, a break of this trend line would be a fresh sell signal for the general market. And this is something to continue watching. That's why you can see what I did here in the last premium tweet for mid trading on Friday was using the hourly. I could see possibility of a market turn. Using the daily, I can see the setup for market turn. And I'll show you some weekly charts that, as I did suggesting around here, we might get a market turn, which leads me to believe and speculate. Of course, it's always going to be speculation because we never know, that we might be setting the stage for an early break of this trend line. If that's the case, if that's the case, then you want to be positioned short. And so we'll see how that plays out. But if the market holds support on the line and moves higher, of course, we have to anticipate that we are better off playing the market from a long side. In other words, we are better off playing bullish ideas. We'll see how that goes. Take a look at the Dow daily, and even at the highs for the day, you can see that this is what the market is trying to decide. Is it able to move above this line? I'm not sure, right? So that's going to play out. And then we also have this break point. which is being tested. So here we had uniform activity above the line, back below it for this high, and now we are back testing the red line. So if the market is able to clear and move above these two lines, that's very bullish. We can anticipate movement higher. If the market is to continue showing resistance around current levels and we pull back, and then of course then we can start anticipating the next move to be lower, which is what I have already done based on the premium tweet from mid-Friday. Now we can also take a look at the Dow Transports, and we can see the reason for the recent bounce as far as the Dow Transports are concerned. We can see that the weekly gave us this line here. Let's try and do it like that. We discussed this many weeks ago. Possibility of a bounce based on that uniformity support gave us those lows. Right, so we've already seen the market respond over a couple of weeks to the upside. That's good. Now the question becomes, now that we are trading above 50, I can argue here, and I think I guess it's pretty much in play. It's a simple line here. And what this line gives you is it connects the lows of early 06 and this low here. It gave us a break point here of the trend line, the red line, which is here. And now we are coming back to back test it. As of this week, we've seen a strong week for the Dow Transports. Why? Because Dow Transports up above more than 4%. Why? Because it's moving above 50. And you can see where I'm getting with this is I can see a scenario here where we show resistance in the new week, or in the new month of December, and we have a big down week. Why? Because the RSI would be drifting below 50 on the weekly time frame. So that, in my opinion, the red line is suggesting to me that it would make more sense if we show resistance here and we pull back at the beginning part of next month, which is December 2018. We can also see this if we take a look at the daily for the transports. There is this break point, clear break point here on the daily for the transports. And now we extend that line, and you can see failure to move above this line. If it fails to move above that line, that might suggest where it stalls. Now, I lean to stalling as of right now based on the 2 hourly for the Dow Transports. And again, you can see here, just not my opinion necessarily, but there's a line here or a level which is pretty obvious here in what the market's been responding to. And now we are back in the general area of resistance. So if this continues to be the look, then that means that we stall around here and that the next meaningful direction for the Dow Transports is lower. Take a look at the S&P 500, and we have a similar situation here where we have the weekly, which gave support, something we discussed over the last couple of weeks, and the possibility that that would lead to a bounce with that double bottom support, or at least you've seen this on my charts. And all right, so that's good, which might explain why we stopped going down around current levels here. Now, just like we saw with the Dow Transports, now we can see the market's coming back now to do a test of this line here. And again, connecting the lows, double bottom lows, gave us the red line. We broke below of the high resistance on the line, weekly resistance there and a pullback, and now we are back to test that. If that is confirmed as resistance in the new week, new month, new day, as we go into the new month, that is where we can expect markets to stall. You take a look at the daily for the S&P 500. We've seen this with the Dow also. There's a line connecting RSI topside. We have to clear this level if we are going to move higher. We have yet to see that, and we have to clear, at some point we have to clear this line here if we are going to move higher. But for now, the most relevant line is the nearest line, which is the RSI topside. Failure to move above this line does suggest stalling around here. Take a look at the 2 hourly for the S&P 500, and to be consistent with the other charts we've seen here, we can see it is definitely testing this level here where we have resistance of the high, and looks like we might just be forming double top, which means we stall around here. And again, just like we saw with the Dow, with the NASDAQ, excuse me, we see a clear line of what can be very good support if it can hold, right, connecting the lows of 09, 08 and this low, and we are slightly positive as we go to the end of the month, which is a sign of support here. But now this is the crux of all this, is in a way it could also be a trap. In other words, let me try and explain this. So it can be a trap in the following sense. So let's say that's the line. In other words, that's the blue line. It's this line here. And so what the market has done pretty much is 09, come back here. This is 2000, so this is 09 lows, which is here. We come here, which is this level here in 2016. We bounce higher, and now we are showing support in 2018, right? Late 2018, 01. All right. So this is right now showing positive return for the month, which is good because it is at least finding support on the blue line. Now the problem becomes, or the trap is, a break of this line in the new month would be a fresh sell signal, and that's the trap. So now that you've confirmed that the blue line is legit, this also becomes the level to watch, because a break of this line confirms that you are now giving traders a fresh actionable sell signal. So in other words, it is good as long as it is holding, and a break of this line in the new month would be a fresh sell signal. Now, given what we've seen on the daily, on the weekly, and the 2 hourly, which are showing resistance or possibility of resistance, this leads me to believe this could easily be broken as we begin the new month, and that's going to be good for a massive drop if and when that happens. Now we can also see this by taking a look at, for example, the Vanguard Total World Market Index, the VTI, and there you have it. So we are ending the month of November with positive gain, which means that this is holding, which also means that this is a trap. A break below this line is going to be a massive sell signal because it is a long-term primary trend line based on coming off the lows from 09. So I would say be careful here if you are long, because a break of this line would be disastrous. Now, of course, the positive bullish takeaway is the more the market can build on support here, the more it means that we are gonna have to test these highs, if not break out. So the more we find success on the blue line support, the more this market is gonna have to make a push to new highs. And of course, as we've discussed here, this is also a double-edged sword, because a break of this trend line is going to be a fresh, massive sell signal. And that's where I am leaning based on weekly, daily, and 2 hourly. And since I'm talking about the VTI, let's take a look at let's go to the weekly here, excuse me. See if I can get the weekly. You can see the weekly, just like we saw with S&P 500 and NASDAQ. We have now this line here. This is a big deal in my opinion. This blue line is now being tested on the underside. Failure to move above this line does suggest that the next major trend is down. So something to watch, something we've been discussing in this video. And we can also see this if we take a look at the daily. We have a challenge here because of this level, given that this is where we broke down off the highs. We found resistance here of these highs, back to test. So the charts are pretty much similar, and we can also see this on the 2 hourly, that what the market is doing is it needs to decide what to do here. Resistance on this line here is definitely a sign of a market that's going to begin the month with a pullback, which might break those monthly support lines, which might be a fresh sell signal in the market. Of course, what the bulls want to do is push this market beyond the red line of resistance. Now, speaking of other markets, take a look at the TSX Canadian market. I'm just going to draw a line right there. This is where the fight is taking place in the Canadian market. And I'm just trying to show you that this is not just a US market situation. Other markets are having to decide what to do here. I think this looks like it is setting the stage for resistance. We take a look at the Canadian daily chart, and again you can see this band of resistance here where we come off the highs there. Resistance on the around the 50, which is a red line. Resistance around the 50, which is a red line. Resistance around the 50, which is a red line also. RSI 50 resistance. And as long as we are seeing this possibility of rejection, this ongoing rejection, that leads me to suspect that the next meaningful direction is down. And to show how this plays out on the long-term monthly chart, again, we can see that this is make or break in the new month. It could be good support, or it could also be a trap. So we have support based on RSI lows going back to late 08, early 09. Support here in 2016. We are doing the best, which is find support, which is exactly what the bulls want. And equally, it serves as a trap zone, because a break of this blue line is going to lead to a massive fresh selling. Now, I was going to discuss the following instruments, but there's no point, because pretty much, if you've noticed, I'm just going around repeating the same thing. The BKX, same situation on its monthly, daily, 2 hourly. Semiconductor index facing the same type of resistance. Either we're going to find support on the monthly here, which would be bullish. Again, all these are just the same, so I'm going to just skip discussing this. Either this is going to hold or not. And the same thing can be said with the BKX on the long-term monthly chart. Is you want to see this holding support if you're bullish, and bears would like to see a decisive break of this trend line. Of course, we lean to a break of the trend line for now, based on the backtest of the weekly RSI, based on resistance on the daily, based on resistance on the 2 hourly as discussed here. Let's take a look at the USO, and I'm going to go to the USO. Let's go to the USO weekly as we take a quick look at commodities, just a few charts. what we have here is USO trading below 30.9. What that means is you are still in a bearish trap. Chances of sliding further down are very high as long as the weekly is below 30.9, and this is cemented by the following observation, which is ever since we dropped below 30.9 on the daily, which goes back to this area here, ever since this period here, RSI has been below 30.9, and as long as it remains 30.9, below 30.9, expect this type of a reaction. In other words, I would expect lower prices as long as the RSI on the daily and the weekly are trading below 30.9. Speaking of weekly charts, those who are bullish on the US dollar can take encouragement that as long as the US dollar is trading above 69.1, we know the drill. What that means is that it is going to favor upward price action. So as long as the dollar is above 69.1, it's going to put pressure on commodities. And keep in mind, this is a very tricky spot because I'll just simplify this. This is where the dollar has been stalling. You can see a break of the trend line in early 2016 off these highs, resistance of the highs there, and now here we are potentially in a level of resistance. So the dollar still not sure it moves higher, but as long as it is trading above 69.1 on the weekly, we have to give it the benefit of the doubt to move higher. Now, going back to and staying with the weekly charts, take a look at gold, and I'm going to use GLD. You can see the challenge for gold as of right now, which is consistent with the dollar chart, is this is where it breaks down recently. Off this level, and we draw a line from there. Be something like that. You can see where the dollar is, no, where gold is struggling. Resistance of this high. So until gold can clear this line here, which is a uniformity resistance line, until we can move above this level, gold should be sideways to down, in my opinion. And this is also confirmed by the GDX, which also is showing backtest uniformity resistance. I can even draw it this way. In fact, let's keep it this way. You can see that this was a break point which has turned into short-term resistance. So here it's very simple. As long as we continue seeing resistance on this line, we can anticipate that the GDX, the mining sector, is gonna be sideways to down until when we can move above this resistance line. And that's as simple as it gets. All right, with about 50 minutes to go, just let me give you a snapshot of what the market is doing. We continue trading at the highs for the day. And I'm not sure how this is any different. It's not changing the hourly charts or the daily charts or the weekly charts. So I still lean to the idea that this is just setting the stage for a pullback at the beginning of the week and a potential break of those monthly charts. Of course, we'll see how this plays out. If the market can clear the resistance levels discussed here on the hourly, 2 hourly, daily, and weekly, then the market is free to move higher, but I think the resistance continues to hold. Now what I'm going to do here is take a quick minute or so and discuss the cryptos by way of taking a quick look at Bitcoin, which is trading right now at about, let's see here if I can find it, at about just above 4,000, down about 6%. All right, so what we're going to do here, we just take a quick look here as a representative for the sector. You begin with the monthly chart. Now keep in mind, I talked about this. Keep in mind, we talked about this. Expect a big down month whenever Bitcoin drops below 50. And it dropped below 50 this month. Guess what? You had a big down month. And I believe this is showing here down 36% for the month of November 2018 alone. So you had fair warning. This is also a reminder, whenever you see an instrument do this type of thing, drop below 50, and in the case of Bitcoin, it was also coinciding with movement to fresh weekly lows, fresh monthly lows, that was setting the stage for a massive drop. And we saw that coming. So the movement lower, no surprise. Keep in mind, I have been talking for many months that the downside risk was real. Why? Because the RSI was below, the MACD has been below zero for a period of months and trading at all-time lows. So the drop in Bitcoin, frankly, has not been a surprise. If we take a look at the weekly, so what the bulls want to see here is stability around 30.9. Keep in mind, a drop below 30.9 is just going to add more selling to the downside. Just something to watch. Holding above 30.9 on the weekly is good, or at least gives it stability. Now here's where it gets tricky. Take a look at the daily for BTC. You can see once it dropped below 30.9, these numbers are real. I know it's my own theory, my own research, my own method, if I can call it my own, but it's, based on my own research. Once an instrument drops below 30.9, you have to be very careful. Now, keep in mind, Bitcoin dropped below 30.9 at a price above, let's call it about 6,300. And it stayed below 30.9, has stayed below 30.9 all the way to the lows here of about 3,600. And if you would have pretty much saved yourself from this major drop by understanding what it meant once it dropped below 30.9. Now keep in mind, we are seeing a 6% drop for today, as we are seeing a fresh resistance around the 30.9 level. So as long as Bitcoin is below 30.9, the risk, and it's just risk, the risk is there's more probability of downside price action. In other words, it's very risky and does suggest to anticipate lower prices. Don't expect Bitcoin to have momentum to the upside as long as the daily continues to trade below 30.9. And here's something I should add here is, the more we are seeing rejection around 30.9 on the daily, the more it suggests that we are going to have to test these lows, if not violate them violently and aggressively to the downside. So the more we see resistance at 30.9, the more Bitcoin cannot hold above 30.9 on the daily, the more it means a test of these lows, if not a break of the lows and a movement even beyond current lows. So these lows here above 3,600 could still be under threat as long as BTC is unable to move back above 30.9 on the daily. Now let's assume you were really wanting to be part of any upside in Bitcoin. So let's say you really wanted to catch the next bounce, whether these are the real lows or not, but you wanted to play any potential upside, any. I think the best thing to do here is very simple. You have to insist that Bitcoin is trading above 30.9 on its daily. That's number one requirement. Number two is you can be patient and use the recent highs. For example, you can see there is a recent band of resistance around 4,400. You would wait for that to be clear to the upside. So another way to say this is take a look at the 4-hourly as an example. And what you can do is, if you want to play this correctly with reduced downside, there's always downside risk, but with reduced downside risk, is it might make and does make more sense if you can wait for it to clear this level here around 4,400, 4,500. Somewhere around here, you can see how this was support, on a daily closing basis, try to hold support, and then we broke below it, became resistance. So this level around 4,500, 4,400 has been short-term resistance. And the best thing to do if you want to capture any positive bullish move, wait for it to clear. In other words, a breakout above this range would be the best thing to do. So what I'm going to do here is give you a snapshot of the market with about 40 minutes to go before the close of the week, close of the month, close of the day. And the best thing to do is take a look at the S&P 500, at the market highs. And again, we continue seeing that the market is still within resistance. And that's why I say this could still be where the market stalls, around here, which sets a stage and a tricky stage for the market, because a pullback on this, hope you can follow my chain of thought. Resistance on the 2-hourly, on the SPX would suggest we start pulling back in the new week. If you take a look at the daily, resistance on the daily for the S&P 500, see whether I can show this. In conclusion, that is, can even draw it this way, whichever way you want to look at it. Resistance, and here we are. So if that can also be confirmed as resistance, if the weekly ends up being confirmed as resistance based on the three-year weekly, so just bear with me here, this is conclusion time. If this ends up being resistance, backtest failure, if that is a big if, of course, and the monthly, excuse me here, if this ends up being broken, that's going to be a fresh signal. And of course, we discussed this idea that we have to be careful here, because the more this is confirmed as support in the new month, the more we start respecting the market's possibility and intention of probably testing the recent highs, if not breaking out. As long as this is holding support, this becomes part of what could be what the market is setting the stage. So even though we are trading at the highs for the day, I still use those short-term hourly charts, which might suggest around here we stall, which might impact the weeklies, the dailies, and ultimately might lead to the break of the long-term trend line, which might give the market a fresh sell signal as we begin the month of December, which might be good for a massive drop in the new month as we conclude the year. Hope that makes sense. Eric Moore with Mother.com. As always, good luck, peace, and blessings. E-A-C. S. Ooh, please. Ooh. Da, da, da. Ah, yeah, yeah, yeah.